Hey guys, it's Czar. First sign of reasonable movement for me at the very least here in this London session. It's been a very sloppy, although look, in retrospect, this looks fairly clean, but it actually wasn't. The microbiology of these candles, the internals, the anatomy, if you will, of these candles was not very pleasant. And I think a lot of people have been struggling this morning. But now we're seeing a break. It's a kind of a clean break into this zone. Unfortunately, it's not a particularly large zone. The whole thing's about 16 points, so I may not take anything here. But I'm going to take a look. It may actually be a reversal opportunity, quite frankly, given how I'm feeling about this whole move this morning. But we'll see. We've had this contracting pattern that I sent to my group early this morning. It's still in Asia when I sent it. And this is the Asian session here. This is London session, of course. London Open right here at 3 a.m. my time. And the pattern that I sent out was this one that you see here. This is not going to be a very clean depiction of it, but you'll get the idea. This mark is not the greatest. And basically explaining that this is going to break out, obviously one side or the other, and that just has to happen because of geometry. As you reach the apex, there must be a breakout, obviously. And that was to the upside for now. It could be argued that it was actually initially to the downside, right here, depending on how we draw this, coming into the London session. So this wouldn't have happened yet. If you were coming into London, this would have been the low, and you might have drawn it like this, and then had this false break or fake out to the downside, and now a break to the upside. Very often that second break is the real one, and this could rally for the rest of the day, but we'll see. We'll keep our eyes on this whole thing, okay? I'm going to put you on pause so you don't have to sit through this whole candle, and I'll bring you back. Talk soon. Okay, guys, we're back. A number of minutes have passed. We have 1 minute, 59 seconds left in this 10-minute candle. I'm watching the 1 minute as well. Getting a bit of a pullback now. I'm going to just take you out to the 10-minute only. We've only got a very small range here to work with, and then we're at key resistance here. Very, very key resistance from yesterday's New York violent rejection here. Or I should say strong rejection. Got pretty interesting after that. And again, those forces are probably still very much intact. All right, this range filling on us as we speak. So we might not get a chance to take advantage of this. 20 seconds left in this candle. I'm going to bring out this marker, but likely won't get a chance to use it. I mean, you can't use a marker, but you know what I mean, to take the trade. And I'm going to go over to my platform as well. New candle, looking for a wick down first. Looking for a wick down first. Don't think we're going to get that. 69.75. It's not much of a move here. Yep, no wick down. All right, buy stop limit. Above this candle, okay, right there. In. I'm in. Oops. This would be a 4-to-1 risk reward ratio. I'm going to make it a 3 actually. I'm going to make it a 3. 3R. Done. So it's only 8.5 points, but it's a 3R trade, sizing on the 1 and then making the 3. And this is the point I like to make, is that it doesn't matter how many points you're dealing with, within reason, obviously. The moment you get beyond about 5, you're sizing with R's and R values, and in my case that's 1% of account value typically. Sometimes it's half of 1%, sometimes it's as much as 2% depending on the setup. But there's a 3R win. Thanks for joining me, guys. We'll talk soon.